All right, welcome everybody. It's Wednesday, July 21st, 4:30 p.m. I have the pleasure of speaking to Faisal and Austin. It has been a long while since we've brought the crew together, but I figured today is as good of a day as any to bring them back to discuss what's happening in the stock market. So welcome, both of you.
Hello, everyone.
Yeah, good to be here. It's been a long time.
It definitely has, and we've definitely missed you guys, but I'm really happy to, catch up with you. Previously, just before the call started, we were just talking about what's happening in the stock market front. So let's just jump right in, right? First of all, what's going on? Like what's going through your guys' head in terms of the stock market? Where are you, mentally? We'll start off with Faisal here.
Oh, mentally, it's been kind of a whipsaw over the past couple of days. I mean, just whether you're looking at the rates, how the rates correlation is going with growth, or whether or not value is going to start outperforming, even with this COVID variant, as we saw today. Like I think cruises, airlines, all these stocks that were down so big on the initial news of the Delta variant, they've bounced back hard. And while personally, I don't think they've proven enough, like I wouldn't be buying them down here. It's definitely interesting to see just how much volatility has come back into these stocks, even though the risk still seems like it's there. So, for the most part, I'm just focused on buying the highest quality names that are growing next year. And there are certain themes that I'm kind of sticking with, whether it's, electric vehicles, Chinese electric vehicles, or something like that. Just the very fast growing themes that I think will be persistent probably from now till the end of next year. So yeah, that's kind of where my mind is at, just looking for a long-term buy.
So that's a really good point. I want to hear Austin's thoughts on this, and also obviously I want to hear where Austin's mindset is.
Hello, everyone. Good to be back. And as I recall, we've been doing these calls for, I think, almost a little over a year. And I really have not changed my stand, and primarily because the first call we did, I said, I think it was at the beginning of the COVID crisis. And I said, just remember that out of this crisis, we're going to have just the greatest period of innovations, and it's going to drive the market to new highs. And after a year, as we sit here today, I have not changed my stand at all. You have Fed that is still very accommodative and committed to these risk asset prices. So, I still think that we are in very early innings of this huge innovative period that we were seeing, and it's it's just probably some of the best times to be an investor. And like Faisal said, I continue to do my work, trying to find companies that are disrupting and that have a very, very good lineup for earnings and revenue growth over the next few years or so. So once again, I'm very positive on the market. I think all along, almost on every call, I said the same thing. I said, hey guys, a lot of stuff you hear in the news is 90% noise, and you got to just focus on what Fed is doing. And as long as Fed's got your back, you don't want to get out of this market.
That's a interesting point that you bring up. So it seems like both of you are relatively still positive on the market. The Delta variant news hasn't really shaken your thesis on the bull market, being intact. Is that correct?
For me, I think it's been a little bit more. I think basically what I've seen over the past couple of days as the Delta variant has kind of taken effect is that this market will probably become narrow, just as we remember it being last year. I think there was a period in last year where we would look at the board and it would only be Apple, Tesla, Nvidia, Amazon. Those were the only stocks that were going up. Even the growth stocks were kind of, puttering around, but those were the main drivers of the market. And so I think for the most part, you're going to see continued volatility in a lot of those names, even in the industrial space, because I think the dollar is probably going to rise and that'll affect them. You're just going to see a lot of volatility in these secondary sectors, but tech in general, I think, should continue to be a big driver as long as they continue to grow this year and next year, and rates continue to stay this low.
So it was definitely interesting to see the VIX pop up a decent amount on Monday, right? Because that's probably the first day that we really started to see the whole Delta variant news seep into the market. Now, what I find interesting is, I think you're really right in that we're starting to see a narrowness to the market in the same way that we saw, I would say, how the market was caught off guard in March 2020. And this time around, I have a fundamental belief that in some way the Delta variant is going to seep into the market and is going to impact the market, but definitely not to the same degree as March 2020, because I don't think the market is that dumb to have the same kind of impact this time around again. I think people have smartened up. Is that something that you subscribe to?
Actually, I think that Delta variant news, if it causes a little shake up in the market, it's really positive, and market is due for some sort of correction as the sentiment has turned really positive. So I totally agree with you. I think during the COVID crisis, at the speed that we developed a vaccine at, it's unprecedented, and now we know how to at least tackle the virus of that kind. So I'm with you. I think that if this new variant causes any kind of turbulence, it'll be short-lived, very short-lived.
Okay, so let's start dropping into different sectors then, because whether the Delta variant is real or not, or whether it's going to have a significant impact on the market or not, it seems like post March 2020, and as we head into a Delta variant environment again or not, it seems like the better play here is once again tech and growth. It could be that this time around, maybe some of the same stocks that really hit home last year might play again the same role this year. Is that something that either of you believe in?
Yeah, I mean, you're already seeing that now. Take a look at DocuSign. I mean, just made an all-time high, and DocuSign is a business where they're going to see continued growth as people move away from firsthand contact and start doing signatures online. And they were the first growth stock, I think, to make an all-time high, first high growth leader that I watched to make an all-time high this week. So you're already seeing an outperformance just relatively on a relative basis compared to the COVID winners of last year, and well, I guess not after today because the value stocks did so good, but past couple of days it was apparent that they were doing better, and like I said, you see leaders like DocuSign making an all-time high, Shopify and SE. Those stocks are very close to making all-time highs, and even though the valuations are also very high, as rates continue to stay this low, yeah, you're probably going to see more money move into these names because they are somehow seen as defensive, despite the fact that they are expensive.
Defensive in that they're defensive towards the COVID Delta variant environment, correct?
Correct, because their businesses get enhanced. It's not just they can weather through the storm; they actually, benefit from the storm. So I have no doubt that these companies will continue to grow. And look at the technical picture. I mean, it looks very cup and handily. I mean, just based on the relative strength, everything looks good. Everything still looks positive.
I mean, if you look across the board, whether tech and growth, S&P 500, the Qs, everything is nicely above the daily 20 MAs, the daily 50 MAs. So you're right, on a technical basis, I mean, everything looks pretty healthy. So, I mean, let's kind of talk about, say, the other side, right? Like, how do we prepare or say hedge or protect in an event that the market does start to price in Delta variant? And how would you guys go about, protection?
As far as I'm concerned, that it's very difficult to call as to whether this thing is going to have a prolonged effect or, like I said, in my opinion, it's going to be short-lived. the best thing you can do is, the stocks that are really overextended, sell part of it and raise some cash. And if it turns out to be,
can you give us a couple examples of overextended stocks?
for instance, a lot of these semi stocks, in my opinion, are a little overextended, as the news of semiconductor shortages is well known. And so these stocks are pricing in, a lot of good news. So those stocks are definitely, to me, they're overextended, and some of these housing stocks seems overextended. So what, depending upon what you're invested in, if you have decent amount of profits in certain stocks, sell portion of it, raise some cash, and if it turns out, if this new Delta variant turns out to be a big deal, then you have some cash to deploy. But remember that the only way I will change my mind and become a lot more defensive is if I start to see some recession 6 to 12 months down the road, which I definitely do not see yet.
Austin, can you elaborate on how does one identify signs of a recession, whether it be identifying things in sector basis or some macroeconomic indicators that you look at?
The easiest way you could do is just follow the inflation numbers. If inflation starts to get out of hand, and which I do not see time being, I think deflation is more of a risk than inflation. If inflation gets out of hand and you see Fed unexpectedly start to raise rates, that means that Fed was not prepared to tackle the inflation, and that would definitely send a warning signal to me that get ready. We might be getting close to a recession in about a year or so.
So let's sort of break down some of the FOMC minutes from the last couple of weeks, because it seems like the inflation topic has been coming into the conversation more and more. We see that either in consumer goods, asset inflation, right? What you're saying is you don't think that inflation is really a risk yet, but if it does become a topic of conversation within the Fed and they have to start making, I don't know, maybe culling the inflation a little bit, then you think that, okay, then this is a real risk. Am I getting that?
As far as inflation is concerned, I think the numbers that we are seeing now, currently seeing, is primarily due to the fact that during the COVID situation, the supply chain literally shut down, and a lot of factories, a lot of capacity was put on hold because they could not get the employees in, and they were working on skeleton crews or whatever. And now it's starting to open up. So what we are seeing now in consumer prices is due to the bottleneck of the supply chain, and over the next 6 to 12 months, you will see that those prices will start to ease. As you could see already, lumber prices are back to where it started. So their run up was very short lived. As the capacity was put back on, people were brought back in to start their factories, and so I think for that reason, I think that I really do not see serious inflation issues over the near term.
And obviously, even if the inflation conversation does come in, it doesn't seem like it would be prudent for the Fed to even consider raising interest rates, because it would almost be like debt suicide, right?
Absolutely. That's what I told you guys a year ago. I said, we're taking on so much debt, and no way, Jose, the Fed would be eager to jack up the rates, because that's really committing a financial suicide. And Fed has so much power Right now, the rest of the world is looking up to what Fed is going to do. So they have so much power that they're going to maintain the low rate environment for foreseeable future, which is very positive for tech and very positive for the growth stocks in general.
Fantastic.
Yeah.
Let's cover one more macro. Oh,
Go
go ahead.
I just
Faisal.
wanted to touch on that. Yeah. And even for someone like, I know Austin thinks this whole thing is like purely transitory, but even for someone, I think, there are parts that may not be transitory. When I look around and I ask people, I've asked, two people who have left their job and decided to get a new one. What was one of the primary reasons that they left? They said, people are paying more. Like, we can get more from another job. And I think wage inflation is something that will probably stay. It's not going to be something that's transitory. That's just what I'm seeing from my personal experience. But just like Austin said, even if wage inflation stays and it goes up, I think the Fed will just move the bar higher. Like, I think, once again, it is suicide if you end up raising rates when you're taking on just so much debt. So even if you're caught up on the fact that wage inflation is here to stay, it's probably not a good idea to short the market or think the market will go down because, inflation may go up, but once again, the Fed can just move the bar higher.
Remember that inflation becomes an issue, a serious issue, if you are not able to increase your productivity. And as you can see over the last year or so, there has been so much technology brought in. Now, I was listening to Bank of America. The CEO said, listen, we're not really a financial company. We are a tech company. These guys, literally everybody has brought in so much technology to become more efficient. And even if their wages go up, as long as they can deliver the products, bring the prices of their goods down, but increase their margins, that's what you want. That's the best of both worlds, and that's what you're starting to see. The more and more people, the companies are deploying robotics, AI, and software in general, to become more efficient. So, which to me is very positive.
So what do you make of this concept that's rolling around in the employment environment, which is there are a lot of people still basically getting stimulus checks or unemployment checks rather, and they don't really want to take a job because they're making so much money off unemployment. Because no matter where you go, I was in Texas, Florida, I went through Tennessee, Indiana, everywhere you go, there's hiring signs, but people cannot hire staff. And this is either restaurants or gas stations, or even, say, smaller businesses that are starting to come up off the ground. How does that factor into the idea of inflation and also productivity, as you said?
Well, this is exactly my point. If you notice that, I was just reading last week, McDonald's just opened up their first fully automated store. If they can't find people, if people refuse to come back to work, they will automate their stores. And they'll bring more technology. Again, this is the same thing. Now they have excuse not to pay high wages, because, and then they're going to replace these people with robots or whatever have you. So and bring their cost even further down. So either way, it's a win-win situation for corporate America. The longer these people refuse to go to work, the bigger excuses they have to automate these their workplaces.
So what you're really saying is, to save America, we all need to get McDonald's jobs and eat McDonald's.
Exactly. And stay healthy.
Fair enough. So let's discuss one more point in macro, and then we'll dive into sectors. So yields, right? I mean, what's happening in the bond market? Can you give us a primer on that, Austin?
My gut feeling is the reason we saw this yield drop was in anticipation of this new variant catching fire, and bond market was front running the outcome, not knowing how bad it's going to get. And to me personally, I think that we're not going to see much more further sell-off in the bond market.
Okay.
I mean, in the yields.
Okay. Any thoughts on your side, Faisal?
No, I'm not that experienced in bonds. I just try to make little sense of it when I see TLT and try to compare it to my growth stocks. But lately it's been crazy. I don't want to act like I know what I'm talking about. So I'll just leave that to Austin.
So when we start seeing higher volatility, whether it's in the US equity space and the bond market side, is there something both of you do in terms of preparation or de-risking?
I mean, I literally raised a lot of cash over the last couple of months or so, and not knowing exactly this could be a replay of COVID, and I'm hoping there's a big shakeout in the market again. It will give us a great opportunity to buy great stocks again. But if so I'm in a pretty defensive position. I don't know about you, Faisal, but
I'm definitely more like, I just think the opportunities, the market may be at all-time highs, but there are definitely sectors. This market has rotated and sold off in such a unique and mechanical way. I think it has really presented the fact that this market, the indexes will grind higher, but you will still have some sectors drop, like IYT. IYT is the main transport ETF. I mean, that entire sector has pretty much corrected. I forgot how much, maybe like 10% or so. That's pretty much done pulling back, but you still have the Dow very close to all-time highs. So, the market will keep presenting itself with opportunities. And I think if you're an active trader like myself, you can kind of see which sectors are overheating, which sectors are kind of just getting started. And, like I said, I try and make it simple and stick with growth as being the main driver. And, the things that are going to be growing this year and next year, those are the things that I want to play. But once again, the market is giving you opportunities. So even if you're a little bit afraid, you don't want to buy an extended stock, there's probably somewhere else in the market that you can put that money into.
So at what percentage of being vested in the market do both of you feel comfortable with right now, given that, hey, we are peaking all-time highs in indices, but then maybe growth and tech look good, but then here comes the Delta variant. Like, what do you guys feel comfortable with right now?
I mean, I'm almost 35% in cash right now, which is very high
Interesting.
for me.
And Faisal?
I'm around like 15% in cash right now, but most of my longs are centered in long-term plays. And then I'm just trying to kind of trade out of momentum plays. Like I just got into Tesla today. I don't know how long I'm going to stay with that, but EVs in general have looked really good. Clean energy stocks have really looked nice. And I think, Tesla is just one of those big cap stocks that I think has consolidated enough, still has a lot of growth ahead of it. And yeah, I think this is an opportunity where it's not an extended stock. Sure, if you look at it on the weekly, monthly perspective, it's I guess extended, but once again, it's growing at a phenomenal rate. So I'm willing to bet that the worst, we've probably hit the bottom of this consolidation period.
It definitely looks like a very nice reaccumulation period in this range that it developed. So I agree with you there. What other EV stocks are you kind of paying attention to? I know you said you're looking at some of the China EVs.
Li Auto. I'm a big fan of Li Auto. I know Austin is a big fan of XPEV, and
what are the tickers on these?
LI
And XPEV.
Okay.
And let me add my 2 cents. I totally agree with Faisal that I am very, very positive on the EV market. As more I read about what's going on, especially today's news, where you know Tesla's EV stations, charging stations, literally any other EV company, they'll be able to use their stations. So, and also Biden administration is just committed in a huge way to develop the infrastructure, and they think that they can create about 400,000 jobs, high-paying job in the sector. So over the next few years or so, they're committed to really make a big push on EV. So I think it's a very early. It's not very early, but it's the right time to be looking at this sector. There's a lot of good opportunities. I was telling Faisal that the best way to play EV is just buy a lithium guy that mines the most lithium, and that's ALB is a symbol. They're the largest lithium producers, and they're bringing on 2 mega factories to increase their capacity, and with everybody and their brothers getting into the EV side, we're going to need a lot of batteries, and they all are going to need lithium.
So in the EV space, you said XPEV, LI, and Tesla, and then ALB is the lithium ticker that you're paying. Got it. Last time we spoke, both Faisal and Austin, you guys were both really big fans of the gaming space. I see a comment from one of our members mentioning that Amazon's long-awaited play into the gaming space is on the horizon. They're supposedly coming up with a game which is supposed to be a competitor to World of Warcraft. Any thoughts on that? Have you guys been paying attention to Amazon?
Dang, gaming's kind of up in my space, but I did not hear about that news. The only one that I'm aware of was that Netflix was potentially going to be getting into the video game space. But it's a very great space. I will say, the growth from the individual publishers, I want to see more growth. I don't know what is going on. The video game industry is turning in the right direction, but a stock like Activision, I've kind of cooled off on. The games that are being made, they're not capitalizing on this monetization trend of having a singular game, kind of like Fortnite, consistently updating. It's a very low cost model, but can yield very high margins as they play into these different themes like the metaverse and stuff like that. And I don't see that much development in that. So I've really kind of cooled off on them. The valuation is a little bit higher than I want to pay for. Maybe if it comes back around in the 70s, I'll pick it up. Video gaming in general, I think the best play, I've said it, the easiest play is, and it's probably not a popular play right now, but it's probably Tencent. They have the best portfolio. They own percentages of Activision, Riot Games, which has League of Legends, and I think Valorant. If you know video games, they have percentages in all these different very high quality gaming studios, which are the real prizes in the gaming industry. I mean, Microsoft just paid, what was it, $9 billion for the gaming studio that makes like Skyrim and Fallout 4. So these are very highly attractive assets, and Tencent seems to have their foot in every single great studio. So I want to keep an eye on them, but once again, you got Chinese regulators down their throat. It's not the best situation to buy Chinese stocks, but once again, this is when the fear is high. So I wouldn't be surprised if now is a good time to buy.
Yeah, good point. Buy the dip, sell the rip, right?
Yeah, I mean, the growth just looks phenomenal. The management in Tencent is arguably like a top 10 management. I mean, their portfolio is fantastic. I mean, it's really one of the best.
I totally agree. This Tencent is one of the very few Chinese companies that I would buy.
Are you guys so from last year, or I guess earlier this year, when we had the conversation about Alibaba and stuff, so have your fears kind of cooled off a little bit more about China's sort of authoritarian regulatory pressure on the corporations that they have? Like, have you guys kind of alleviated those fears and said, you know what, maybe that was like a one-off event with Alibaba and Jack Ma?
I mean, I had bought Kingsoft Cloud, which is a cloud company in China. It's one of my favorite ones. I bought them a couple weeks ago before, I think the week of that the DD stock got pulled, and I've held on to it through that very ugly drop because the macro trend just seems very, very positive. But once again, I'm caught in this predicament where I have a feeling that yes, the growth is going to be there and it's going to come through. But once again, these regulatory concerns, I don't expect the stock to hit its high anytime soon, even though it's going to consistently grow at 40+% over the next 3 years. My expectations have definitely been tempered, and I think we're near the lows because I think people don't want to touch Chinese stocks at all right now, especially after the DD thing. But yeah, my expectations for how high it can get has definitely come down.
And personally, I don't think that this situation between the US and China is going to resolve anytime soon. So I remain very cautious. Biden administration has taken a stand which is even worse than the Trump administration's against China. And so this thing, tit for tat, will probably go on much longer than we expected to. So I remain very cautious on Chinese names due to what's going on the regulation front.
Good to know. So I think we've had a pretty fantastic discussion overall on the stock market, the macro front, discussing individual stocks. Now, we are definitely a crypto focused community, and I think both Faisal and Austin have been dabbling in crypto, or at least kind of like picking up some points here and there, news points. What are you guys' thoughts on crypto? I mean, it's been a while since we've talked about crypto, but has your mindset kind of evolved a little bit, in regards to how the space is evolving? Do you feel like, okay, it seems like more and more players are getting involved? Paul Tudor Jones and Mark Cuban, Jack Dorsey, Kathy Wood, all these people are becoming more vocal. Like, from you guys as a more heavy equity-based traders and investors, how do you look at crypto now?
Well, I want to be clear. I do have a small position in Bitcoin, and I watch it from time to time, and I pay a lot of attention to the sentiment on Bitcoin, and I'm starting to feel that we are very close to the bottom in the sentiment. It feels like one more major dip in Bitcoin, and I want to just double my position, So it seems like it's trading like any other asset. There was a lot of optimism when it ran up into this 60,000 area, and slowly and gradually that optimism has been waning, and that's what you want to see. At the longer it takes, that there will be a time where weak hands will say, "Hey, I'm out of it. I don't want to have nothing to do with it. It's not my thing." That would be the time to double your position. And so I remain pretty optimistic. I think in the worst scenario, we might see another dip down into the low 20s. That's my take.
Mm-hmm. And and Faisal?
Yeah, I'm still expecting a $100 price target. So. No, I'm kidding. No, I'm totally kidding. I don't expect it to be that bad, but like, I still have not bought into crypto. I've yet to buy my first crypto asset. I don't think I've even bought GBTC or like ETHE or something. Mm-hmm. I don't know. Like, the sentiment from my perspective is, I don't even know what to think about. I still think we're in this limbo where price just kind of doesn't mean anything. And even though we've had this 50% drop, I just feel like I just don't know. I have no idea what to make of it because it's kind of just stood still for such a long time. I'm like, okay, what is this thing going to do? Is it going to break down? Is it going to break out? I have no idea. I will say, though, there are like a couple of crypto-based stocks that I have. There's only one that I actually have dabbled in, which is Silvergate Capital, SI.
Okay.
Yeah, that's the only type of crypto play that I've had, and I think they just reported earnings. They went up like 25% the last 2 days. They're dealing with the financial aspect of the different the crypto platforms like Coinbase, Binance, and stuff. They work with their financial overflow or something like that. But they're a very, very interesting company. I think a much safer way to play the crypto space, considering they don't have any type of hard commodity. I don't believe they don't have any, Bitcoin on the balance sheet or anything like that. They're kind of a more solid company. I think they're profitable, if I'm not mistaken. It's been like probably a month or two since I traded it, but that's the only thing that I'm keeping my eye on when it comes to crypto.
Okay, fair enough. I think the last time Austin and I spoke was the day of the big, panic drop, which was I think on May 19th or maybe May 20th. And we had both talked about how after, a panic selling like liquidation event like that, I think both of us kind of agreed that the market needs to go sideways for a good, month or two, which it has done exactly.
Yeah.
And it has changed the sentiment into an overwhelmingly bullish, FOMO euphoric environment to now a fairly, fearful environment, which is kind of what you want to see. I think for myself, the way I look at crypto is you have to look at crypto in context with the other associated altcoins too, which are things like Ethereum and all the DeFi stuff that has come up, and that to me is a little bit concerning because over the last year, what we saw was a tremendous movement in the market, whether it's Bitcoin, Ethereum, and a lot of those assets are still up, in terms of paper gains, like they're still up a lot, right? From the March COVID sell-off, this asset, Bitcoin, is still up almost 700%, right? That's quite significant. And to me, that still feels like, okay, well, we had this big move up. There's really no consolidation in the move on the way up. It was just like 7 months straight of euphoria movement. And now that we're coming down, it's like, okay, well, we went straight up. Do we just like straight up come back down towards, 15 or 20K and just wipe out a bunch of people? I think that's where my mindset is right now.
I totally agree with you. I told you a couple of months ago I was in Arizona and having a lunch, and the bartender was telling someone else. He goes, I'm making so much in money trading crypto. I don't know why I'm working here. And the customers asked him. He goes, do you know a lot about crypto? He goes, not really. I don't understand a thing about it, but I'm making a lot of money. And that really gave me a little pause, and I pulled all my buy orders on crypto, and I said, this needs to go away. These people need to get out of the market. So I agree with you. I think that this consolidation is very healthy in the long run.
Yeah. Well, listen, I think today was a really great primer on where you guys are in the stock market, where your thoughts are on crypto. I really appreciate both of you guys coming on. I hope we can do this in the future again, because the community likes your guys' views, and definitely people on YouTube do as well. So again, thank you so much, and we hope to catch up with y'all soon.
Absolutely. Stay safe.
Sounds good, man. Take care. Everyone, take care.